So this morning's talk, I'll spend the majority of it talking about how Nasdaq is really involved and participating in the development of marketplaces around the world. And as I said, I'll be focusing on really the role that technology plays. But in addition to that, I'll also be discussing some of the challenges that we see in the broader platform economy. So first things first, I think I should start out by saying that technology really cuts across everything that we do within Nasdaq today. It really is part and parcel of everything that we do on a day-to-day basis, and I would say it's part of our DNA as well. So let me tell you a bit more about what Nasdaq does and why technology is so important to us. So today we own and operate over 30 different marketplaces, so 30 different exchanges and clearinghouses that we operate under the Nasdaq umbrella across the US and the European marketplaces. In addition to that, we have a global technology business that supports over 100 different exchanges and clearinghouses globally today. We also have a SaaS delivery business where we provide compliance and surveillance solutions to over 150 broker-dealers around the world. And in addition, we provide investor relations and board portal technology to over 6,000 corporates around the world today as well. So obviously, we're heavily invested in technology and heavily invested in IT. We're also very proud of our listings franchise, and that's probably what many of you in this room know us for. Today, we have over 3,000 companies listed on our markets across the US and European landscapes. Of those, we have 600 tech companies, and we're proud that we have the 4 largest companies on the planet today on Nasdaq. So Apple, Alphabet, Amazon, and Microsoft all call Nasdaq their home. We also have a venture group that I guess is probably of interest to some of you in the room. So this is a group that obviously goes around, talks to young and upcoming tech companies with a view to making an investment in those companies. And then finally, let me just touch on our philosophy around technology. So we have an obsession, I would say, certainly a major focus on taking technology into live commercialized production. So when we look at things like DLT, for example, I think that it suffered from an overabundance of POCs and pilot and case studies. There's really literally hundreds and hundreds of POCs and case studies on DLT, but very, very few of them have actually been taken into live production. So within Nasdaq, that's something we definitely try and avoid. So obviously I'm here to talk about markets, so let me just give you a brief kind of insight and snapshot of what we do today. So as you can see on the overhead here, probably tough to read from where you are because we have so many different markets that we support, but we are providing technology and services to over 100 different marketplaces globally today. Now, as you can see, most of those are exchanges and clearinghouses, so we have a very, very important role in really the global financial markets. So today, 1 in every 10 securities transactions, they will go through a Nasdaq platform. So that's a responsibility we take very seriously. And obviously, we spend really 24/7, 365 days of the year supporting the global financial markets. So within that, we support a large range of asset classes as well. So within capital markets and finance, we support equities, fixed income, commodities, and derivatives. And obviously, when you move into derivatives, the list and the number of instruments is huge. The important thing here, and maybe the relevant thing for this audience, is that when we step outside of financial markets and capital markets, the breadth and the scope of what you define as an asset or a security suddenly becomes very, very, very broad. So today, we're supporting platforms, exchanges, in the area of frequent flyer airline points. We're working with organizations in advertising futures. We're supporting horse racing operators in Hong Kong. We're supporting horse racing operators in Australia. So by definition, we've stepped out of our kind of core focus and legacy area into some completely new markets. And that's really what I want to touch on today. So certainly we've had a big influx of people coming to us and asking us for help. Basically saying, you guys run your own markets, you support markets globally, can you help us set up a marketplace? So when we take a step back and think, well, what's driving that demand? There's 3 kind of key reasons that we're seeing, and I would suspect most of you are familiar with these as well. So certainly mobile technology, that continues to drive innovation, obviously, and driving at the contact between buyers and sellers. And whether you're in a B2B market or a B2C market, there's now, from where we sit, a move and an interest in industrial-grade technology. And what that really means is that people now need, consumers need real-time responses, they need super high performance and super low latency. And that's what we do. We do that day in, day out for all of our marketplace customers today. Secondly, consumers want fair value for their data. Certainly when we look at the data breaches that have occurred earlier this year, I think Facebook and Cambridge Analytica is probably the highest profile example. But because of that, people now want to have their data properly protected. So we want to know who owns our data, who protects that data, who's given approval to look at our data, and are we getting fair value? Do we receive the money that we should for our data as well? That obviously leads into a discussion we have with many different marketplaces in the area of data integrity. So protecting the data that you have and making sure there's a level of integrity in the way that you manage that data going forward. So Nasdaq, as I said earlier on, we have a business that delivers compliance and surveillance technology to over 150 broker-dealers globally. We support exchanges and regulators in the area of compliance and surveillance. So when it comes to data integrity, we think we are the gold standard and we have some best-of-breed platforms out there. And that's why people come talk to us. As an aside, when we talk about data, and it's come up regularly in this morning's sessions, obviously the data is exploding exponentially and the data sets themselves are becoming more complex. But as an aside, on any given day, depending on the volumes of our marketplaces, we save between 10 and 18 billion rows of data a day. Between 10 and 18 billion. It's a huge amount of data. So we spend a lot of time thinking about it and making sure we have the right technology to support it and manage it effectively. So then the third reason comes down to globalization. We've heard a lot of discussion about that this morning as well. So, seeing the interconnectivity of platforms between ecosystems and different participants. And clearly the community effect that we've heard a lot about today does drive the scalability. And I mention this because when you think about scaling platforms, and when we think about scaling platforms, you have to make sure that you deploy the right technology at the beginning to make sure that the technology scales with you as your marketplace grows as well. So we talk about platforms, we talk about exchanges. I've used those terms, kind of interchanged them in my talk already this morning. So what's the difference? So from a Nasdaq perspective, what's the difference between a kind of traditional or non-traditional exchange platform versus a platform business? And the way that we make a distinction between the two is that a non-traditional exchange, in our experience, they are focused on securitizing non-traditional assets. So people are coming to us and saying, we need to set up an exchange that's trading or clearing insurance, logistics, payment processing, waging type operations. In doing so, they're coming to us with a different view on market models, so wanting to put in place a different kind of trading mechanism than exists today. But at the end of the day, they want to emulate a traditional exchange. A platform business, from our perspective, they're not looking at securitizing a traditional asset. In fact, they don't have a physical asset to securitize. So they're focused very much on the kind of e-commerce platforms that we've heard about this morning, ride sharing, travel booking, two of which we've heard about already. And the difference here is that they're about establishing connectivity between multiple parties and really helping customers derive value from the entire ecosystem. So the key difference between the two, non-traditional exchanges, they measure their end users in probably hundreds or thousands, whereas the platform businesses, they're measuring their end users in hundreds of thousands, millions, and in some cases, billions. And that's certainly the case that we heard of from this morning. So I want to just touch on some of the engagements that we're involved in today. And as you know, and as you've seen, we've come from a big footprint in finance and capital markets. I would never have imagined standing here 3 years ago and talking to you about the kinds of markets that we have today. So the breadth and scope is broad. So today we're working with organizations who are trading frequent flyer points for airlines. We're working with crypto marketplaces. We're working with the sports and gaming operators. We're working with advertising platforms, healthcare, insurance. The list goes on. So what's driving this demand? Why are people coming to Nasdaq now? And why do we think there's an opportunity to do more in the non-financial space? So firstly, it comes down to tokenization and digitalization. So as new technology comes online, we're getting approached by more and more startups and more young companies coming to us and saying the technology is now here to allow us to go after and transform and disrupt a notoriously inefficient segment or a very inefficient marketplace. That means the barriers to entry are coming down. So cloud is an obvious example where people can now set up a marketplace much, much more quickly. You don't have to go out and buy your hardware, your infrastructure up front. You don't have to find your data center. You can outsource the whole lot to a third-party provider. And that, by definition, means a quicker time to market. And what we're now seeing is the growth in many of these new startups is coming where there's less regulation. And that came up earlier on in this morning's discussion. Certainly when you compare financial markets and capital markets, they are very, very heavily focused on regulated marketplaces. Whereas a lot of the new ones that we're talking to, the regulatory burden has not really been there. And that makes it much, much easier to start up a new marketplace. So I've given you a couple of examples here of some of the companies we're working with. Affinity Capital Exchange, they are trading loyalty points for airlines and for hotels. The second one is NIAX. They're a digital advertising platform, in essence trading advertising futures. Those two examples are, I would say, great examples of really coming in and transforming and disrupting a market that was previously not transparent, was opaque, and highly inefficient. And we've been working with these organizations to help them transform those industries. So the obvious question, I guess, for many of you is, kind of why Nasdaq and why are we in this space and why are people coming to you when you, in essence, run and operate exchanges and support exchanges? And we've asked ourselves that question as well. And there's two things. I think one is they want the brand. So people are interested to have the Nasdaq brand behind them if they're setting up a marketplace. Secondly, they're interested in our investment dollars, obviously. So we're not naive or stupid in that respect. But if you put those two to one side, when we study a market and how a market actually looks, there's some kind of key characteristics that I think translate very well from the financial markets over to other segments. So today, a financial market, we trade, we move an asset from one person to another. There's a lot of risk and there's a lot of governance around the way these markets operate, and we handle large amounts of data. And when we speak to startups, they're coming to us and saying, that's kind of what we want to do in our marketplace. And we see you, Nasdaq, as the gold standard. You own your own marketplaces, you run and operate other external customers, and therefore we see you as the gold standard, and we want you to help us, we want you to coach us, and understand and help us understand how to do this, because you've done it before and you're doing it day in, day out. So then we sit down with them and start to understand what does that really mean on a day-to-day basis. And there's a number of core building blocks that we think are relevant to those discussions. Number one is that we have an experience in an ability to manage high volume data sets and very complex data sets. We support many different market models because we run and operate markets globally. And we're delivering high performance and low latency technology every single day, 365 days of the year. So when we speak to new startups and new markets, the mix of the fact we've done it before, the mix of having these building blocks in place seems to resonate and allows us to coach, educate, and help people go from an idea generation to actually establishing and launching a marketplace. There are some challenges, obviously. Time to market is one that we're dealing with on a real-time basis. And I'll give you one example. So crypto markets. Today we're talking to probably 50, 55 different platforms around the world. Some are established, some are looking to be launched and go live. And they want to know from us, they want to work with our trading technology, our clearing technology. So we sit down with them and understand what they want to do, what their market model is. And then the obvious question is, when do you want to be up and running? When is your live date? And really they're turning around to us and saying probably 6 to 8 weeks. So we compare that scenario with a typical exchange in the finance markets. And when we ask them that question, they can be talking 2 years, 18 months, 24 months away. So we have this big dilemma as a tech provider. On one hand, we have markets that want to be up and running plug and play in 6 weeks. And then we have on the other side exchanges that want to do huge complex implementation projects, which will take 24 months. So by definition, that allows us or forces us to think differently about how we engage with these new opportunities and these new platforms. And we're spending a lot of time now thinking, investing, and working out the best way to provide technology to these new marketplaces. I'm going to touch on that shortly. So a related debate comes down to the traditional capital markets versus digital markets. And as I said, based on the previous example, we are needing to think about how we engage, because we need a different engagement model if we are to be successful and if we are to help the smaller startups and the smaller marketplaces get their products and get their solutions launched. So on the left-hand side there, you see a traditional kind of capital markets infrastructure. And the attributes and the characteristics there are, I would say, very rigid. So they're characterized by a lot of regulation. They're characterized by kind of tightly managed, centralized marketplaces. They have very structured and well-known opening hours. And if they're using DLT, then the chances are it's on a private network. So then on the right-hand side, you have what we call the new markets and the new digital marketplaces. And it's the exact opposite of what I just said. So they're not as regulated. They run in a more distributed fashion. They're pretty much open around the clock. So these platforms and these e-commerce sites are 24/7. They're running kind of public DLT networks, and they're typically more B2C. So big differences between the two. I would say that when you think about the regulation aspects, crypto markets, they would have put themselves firmly on the right-hand side 12, 18 months ago. But I think as we all now know, we read in the papers, the regulation continues to increase, and now regulators around the world, they are definitely taking a keener interest in making sure that crypto markets are regulated in the appropriate way. And Christine Lagarde, 2 weeks ago in Singapore, she mentioned the same thing, that from her perspective, that we have to regulate crypto markets in a better way, and we support that from a Nasdaq perspective. So a related debate is obviously trading and settlement of tokenized assets. And I would guess that some people in the room are already heavily invested and looking into tokenized platforms and tokenized marketplaces. If you're not, the way that we define and look at tokenization is really converting an asset into a token that can be stored, traded, or settled on a DLT system. And I think when you talk about immediate settlement and real-time settlement, that has a huge impact, particularly for the world's financial markets, where today it still takes between 2 and 3 days to actually settle the trade. So when you move outside of finance and into other non-financial marketplaces, DLT obviously has a huge opportunity because it really supports the whole life cycle and value chain of an asset or a trade. So we're seeing lots of opportunities pop up. We're having lots of people approach us and ask us for their help to transform and go after particular segments of marketplaces. As you know, there's probably a debate going on around private DLT versus public DLT. From a Nasdaq perspective, when we focus on the financial markets, we are firmly of the belief that private DLT structures are much, much more appropriate for the financial markets at this point in time. We need security, we need proper governance, and in our view, that is the best way to protect the end investor. On the other side, on the new marketplaces, we are completely open to working with public DLT structures. We have a number of discussions and projects underway now where we're doing exactly that. And then, of course, that's linked into smart contracts. And our view on smart contracts is that they will have an impact, without a doubt, particularly on the world's financial marketplaces. It will take some time, but they will get there. And then on the smart contract side, in non-financial, we also believe there was a big impact. So from our perspective, we are developing and looking and investing in R&D to ensure that we support smart contract technology. And we're also working with third parties to help us ensure that we are fully kind of smart contract compliant. Okay, so bringing all this together, what does it really mean for us? I said we have some challenges in terms of our go-to-market approach and how we support some of these smaller marketplaces. So our response to this is what we're calling Nasdaq Financial Framework, NFF, and the whole philosophy and the whole point of investing millions and millions of dollars into our next generation technology platform is to allow us to work with new marketplaces. It's allowing us to bring down that time to market, be more flexible, be more open, and allow smaller organizations to work with us to really realize their dreams and get platforms launched. So the way that we see NFF is in kind of three key areas. On the left-hand side there, we have Nasdaq Core. That is the backbone. It's the heart and soul. It's really the centerpiece of any marketplace delivery that we have. So it's really the kind of transaction processing engine. It's where all the smarts are. It's really where the IP is for our platforms. In the middle, we have our shared core services. So that's when we talk to clients about what kind of data warehouse do you want? Do you want ours? Do you want a third party's, or do you want your own? What kind of DLT structures, private, public? What kind of machine intelligence? So these are all options that we offer our customers. And then finally, it's all about the business logic. So we provide 25 different business applications, and depending on what you want to do with your marketplace, is it a trading marketplace, bringing together buyers and sellers? Is it an auction marketplace? Are you looking more into the kind of settlement, the post-trade? Are you into risk analytics? What kind of indexes do you want? We're essentially providing options to our customers to ensure you can pick and choose what you want depending on what your business actually is setting out to achieve. So it's resonating well with our customers, and at this point we are focusing very much on delivering a great customer experience. So we're now, I would say, rationalizing the way that we go to market. So across kind of 4 key areas now, making it much easier to work with us in terms of more subscription-based platforms, pay-as-you-go, more kind of self-service offerings as well. From a contract legal perspective, instead of having big folders full of contracts, we're now moving more to the kind of mobile phone contract, making it much easier, a much more streamlined way of doing business with us. And then the way we deliver our services, of course, is making that time to market come right down. So unified operations, standardized platforms, plug and play, pay as you go. And then finally, we want to get paid, obviously, but we're needing to make it as easy as possible. So moving more towards direct debit, credit card payments. So for the smaller marketplaces, the pay-as-you-go model is, in our view, the only way that we're going to help you grow and really get out there and launch your businesses. So at the end of the day, we want to really work the way with our customers, the way that our customers work with their customers, and it's about delivering that great customer service. So that's it. I would say that we are obviously living in kind of fascinating times, evidenced by the fact that we are attending a conference like this. From my perspective, it is really time to invest. There are some fantastic tech companies out there. We think we're one of them, but there are many, many others out there that can certainly help and support you in your business ambitions. So that's it. Buckle up, everyone, and enjoy the ride. The smallest company that we've worked with in terms of transaction volumes? Yeah. In terms of like the earliest stage and smallest company? I would say certainly when we started out with NIAX and Affinity, we need the advertising futures and the loyalty points platform. I mean, they had no liquidity, they had no volumes coming through. So they started very, very small. And that's the point, is that we can scale the platforms, and then it's about educating the users and actually using proper PR to ensure that people come to those platforms. So we start small. And was it worth it for them in terms of just migrating to the technology to do that? Well, in their view, it was, because they have the Nasdaq brand behind them. So I think that when we launch and we announce that a customer is launching on a Nasdaq platform, because of obviously our PR machine, people take note. And if your brand and your new marketplace is associated with Nasdaq, being powered by Nasdaq technology, then what we're seeing is that actually increases interest and obviously allows more people to come to that platform. So I think both people benefit, or both partners benefit.
Hi, I'm already apologizing for this question beforehand, but I guess this question had to come up, and you actually mentioned that on your slide as well, but where do you see crypto and cryptocurrencies and blockchain in terms of a threat for your business and for the future of Nasdaq? Is that a topic that is discussed within Nasdaq a lot, or is that just something that you see on the horizon that might come, but is not really on your radar right now?
I would say it's completely on the radar, and it is already here with us. So we have, at the moment, 6 customers that we've delivered technology to who are running their own crypto marketplaces. So our belief is that they will become more regulated, and they'll become more lookalike exchanges because they have to be, because otherwise I think that there is a lack of investor protection at this point in time. So our view is that by delivering what we believe is the world's best trading technology and the world's best surveillance technology, the combination of those two together means that there's good oversight, there's good governance, and there's good technology underpinning those marketplaces. No, I think that digital currency is here to stay. I think it's going to continue to grow. I think there's no doubt about that. So I don't think we see it as a threat to our own marketplaces. Whether we decide to list cryptocurrencies, I think is still being debated, and we've certainly been linked to, putting some of those products onto our own marketplaces. But we will do that if and when we think it's appropriately governed and there's the appropriate level of regulation around that.
Yeah, so I also have a related question. So you talked about the DLT, that we all know that technology is not really ready yet, and about regulation. But also the thing about regulation, it could also be automated. So we all know it. So a lot of regulation things, they can be automated. So my question is, so as I understand, your current business model is that when you issue, for example, shares or you allow trading, you take the fee on sort of every transaction, maybe not on every transaction, every tens or hundreds, right? But so the things get more and more automated, right? How do you see a business model? Because if you take transaction fees, somebody, because it's all open source, somebody may, cut it in half, right? And then you can cut it in half too, and so it's like an arms race. And besides that, there are also like other models, like, sharing the part of the network. I don't know if you know about the EOS blockchain, but sort of you buy sort of some cryptocurrency and you're guaranteed the computing power of it. So, well, my question is, how do you see like the future business model of Nasdaq with this arms race of cutting and decentralizing the fees?
Okay, it's a good question. A lot there as well. So I would say that in terms of the arms race that you referred to at the end there, we've lived through an arms race already on our core marketplaces, to be honest. So if you look at the price of trading 10, 15 years ago to what it is now, and what we take from each trade is completely different. And the reason for that was legislation came in and regulation changed to really open up trading, in many markets around the world. So now, in the US, you can trade Apple not just on Nasdaq, but you can trade it on 14 other venues. And here in Europe, you can trade BMW on probably, 15, I'm looking at Asda now, 15, 16 different platforms. So we've gone through one arms race already. And I think in relation to DLT and the kind of commercial models that underpin some of those projects and those deployments, we're going to sit down and work with our customers, and we'll ensure that, obviously, we're not going to do anything that for us is not interesting commercially, because we're a shareholder-owned company. But I think that now, in our experience of working with some of these new marketplaces, we've already adopted very different commercial models. So we're not just going in there and saying, okay, here's some technology, pay us a license fee and an annual support fee. Those days are, to a large extent, gone in some of these new marketplaces. So we're happy to start low and grow with startups. We're happy to have more of a kind of pay-as-you-go model. And in relation to the example, we'll sit down and understand what exactly is going on, and then from a commercial perspective, come up with something that we think works for our partner, who's trying to set up a marketplace, and obviously for us as their tech provider.